Hello and welcome to this edition of Money in Motion video blog. This is Dan Perkins and thanks for watching. Well, our three indicators have come under a significant amount of pressure in the last few weeks. We now see gold under $1,100 an ounce. The charts tell me that it could go as low as $980 before we hit a hard bottom. If we get to 980, we'll probably bounce off of that, and then we'll probably come back and retest the 980. So gold's telling us there's no inflation fear in the world. There's no diplomatic or political fear in the world. And people are unloading it by the tons. Recently there was a trade for 5 tons of gold in the Chinese gold markets. So gold is not to be a great place to be. In fact, if you're one of the few people who bought at the top, if my forecast of 980 is reasonable, you will have lost close to $1,000 an ounce. That's a lot of money, and you would have done it since about 2009. So I don't see it going anywhere. It may hover around the $1,000 an ounce area for some period of time, but I don't see any specific change unless we have some kind of a major global disaster. So gold is not in play. Interest rates, the yield on the 10-year Treasury flirted with 245. I cautioned you in my most recent blog that at 250 we might have some difficulty, and if we got to 275 we could break out. We've fallen back to 2.32%. And the Fed seems to be backing away from its September indication. The capital markets, which we'll talk about in a little bit, are not giving the Fed any cover to raise interest rates. Lastly, crude oil. Crude oil went from about $42 to $43 a barrel all the way up to $63. It's now $49. So it's within $6 of its low. When we hit 43 and bounced off, I said to you that I believed that it was probably going to go back and test the low and see if the low would hold. I think we are in a situation where I've warned you about surplus inventory in Cushing, Oklahoma, as we switch over from gasoline, that we could see a test of the lows. I think we are on that track to test the lows. And so I wouldn't be surprised if we go back to 43. If we go back to 43, then you're going to see gasoline prices probably in the $1.95 to $2 range after the Labor Day weekend and going forward. So energy is going down. So there's nothing pushing on the inflation index. In fact, with a significant retest of the low in energy, we could find ourselves in a period when we have a deflationary environment where prices across the board are going down compared to the fixed income alternatives. And our puts on the S&P 500 are helping to give us some downside protection. It's not going to give us 100%, but it's going to give us some downside protection. So I expect volatility to continue through the rest of the year and into 2016. People are very concerned about the direction of the economy. Commodity prices, not only gold and crude oil, but copper and silver and many of the raw commodities are coming down on a global basis. China looks like it's slowing down. The European Union is still in quantitative easing to try and get its economy back on. So we may now be coming back to the rest of the world as our economy slows dramatically in the balance of this year. I do want to tell you about something that I'm looking into as a possible investment for us. I have not made a decision, but I wanted to at least bring it to your attention. I think there's an opportunity in investing in the financing of middle market companies. Middle market companies are companies that are designated between $50 million and $1 billion in sales. And I'm looking at programs that are providing investment capital to help these companies grow their business. Sometimes it's in the form of floating rate notes, so that if interest rates were to rise, the rate would be reset. so we have some upside interest rate protection. These things typically play in the 7 to 9% on a current yield basis. Some of these investments also have what are called mezzanine finance, new term for a lot of you, but I've done mezzanine finance since the late 70s. Basically, it's a banking transaction where we loan money to a corporation. We get a reduced rate, but we also get either warrants or stock rights or options on stock at a specific price that we can exercise based on certain benchmarks. That gives you an equity kicker on top of a fixed income investment. I'm researching about the 25 that are in the marketplace at the moment, have not come to a conclusion, but I just wanted to give you a heads up that you may be seeing a new investment in the portfolio of something you've never seen. These typically trade as master limited partnerships. They trade on the exchanges, so there's a very liquid market for them. And I think it's an opportunity to not only get high degree of current cash flow, but built in some growth opportunities in equity as these companies expand, and we participate either through rights, warrants, or mezzanine financing. So, difficult time. I think it's something that I expected. I've been trying to warn you about. Follow the three indicators: gold, oil, and interest rates. And if you continue to see the decline, you can bet that the economy is going nowhere. So that's it for now. If you have any questions, please feel free to give me a call. This is Dan Perkins, and always, thanks for watching.